We're still talking about the most anticipated meeting for the MPC. That's the Central Bank of Nigeria's Monetary Policy Committee. The meeting starts today and ends tomorrow. By tomorrow, we'll get to know what the decision is. At the last meeting, the committee decided to raise interest rates by 200 basis points to 14% and leave cash reserve requirement unchanged at 22-25%. But let's talk to Johnson Chukwu now, who is the CEO of Carry Assets Management, to get his take on and his expectations on this particular meeting. Thank you so much for joining me on the program.
My pleasure. Good morning.
So a lot has been said about this meeting. What are your expectations?
Well, my take is that this time around, the CBN will consider the option of weighing in on the side of growth instead of price stability. If you recall, when you presented your preamble, the CBN governor did say that the emphasis for them is to achieve price stability. But unfortunately, the inflationary pressure we've been witnessing in the past couple of months, we are not driven by liquidity in the banking system. So you're not going to address that inflationary pressure by sucking up liquidity from the system. At this point in time, the paramount importance to the country should be how to restore growth, given that we've seen a 2.06% decline or contraction in the GDP. So my take is that the Monetary Policy Committee will now weigh in on the side of growth, and that they will have to bring down the cash reserve ratio and the monetary policy ratio rates.
So you're of the opinion that they might cut rates. Okay, so neither here nor there, but how do you think the markets will react to that particular move? If, for instance, because my two guests on the program earlier before you actually said they're expecting the CBN's Monetary Policy Committee to hold rates, but you're of the view that they should cut rates. How do you think the markets will react to either of the scenarios?
Well, I think in the first place, what matters most is we inject liquidity into the economy. Currently, the banks are not lending because they don't even have the liquidity to lend. Current rates are so high, yield on federal government debt instruments, true yield on treasury bills are more than 20%. So how would the market react? The market, if you cut rates, you should actually see an uptick in equity investment because if rates are very high in the fixed income spectrum, investors will underweight their portfolios in equities and overweight in fixed income. I mean, it's just rational behavior. If I'm going to get a yield of 20% on a federal government instrument, I wouldn't know why we want to put the money in equities. So I think there will be an uptick in equities if rates are cut. But most importantly, we need to allow the banks to have the liquidity to resume their intermediation role. Today, most of the banks are having very low liquidity position and are not in the position to continue to lend. For an economy that is contracting, I mean, conventional wisdom, which other countries have done in the recent past, is that you try to reintroduce liquidity into the system, stabilize the banking system so that they continue with their lending activities, inject liquidity in the hands of consumers, and also engage in public work so that you can create employment. All we are not doing now, and I think it's high time that if we really want to restore growth, and like the CBN governor said that he expects that the country will come out of recession in the last quarter of this year, we need to use this last quarter to re-inject liquidity into the system. And the Monetary Policy Committee should start that.
Well, thank you so much, Johnson Chukwu, for joining me on the program this morning and, of course, sharing your perspectives with us. It's definitely going to be a very interesting meeting to look out for, but do enjoy your day. And that's it on today's edition of the program. Many thanks for staying with us. Of course, the biggest story for us on Channels Business News is the MPC meeting, which started today in the nation's capital, Abuja. By tomorrow, we'll be getting to know the monetary pronouncements from the committee. Channels Business News editor Bosno Mofaye and a team, of course, are on ground in the nation's capital, Abuja, covering this particular event. The conversation continues online. Don't forget to pitch in. Let's know your thoughts. Of course, most of the arguments have already been laid out, what the central bank, what the MPC actually will be talking about and what they'll be dealing with as they start this meeting. GDP contraction of 2.06% in the second quarter and, of course, inflation at 17.6%. Not to mention that there's been a drop in external reserves. It's now below $25 billion. Oil prices are still fluctuating on the markets. All of this will be considered as the MPC start their meeting today. And that's it on today's edition of the program. Many thanks for staying with us. I'm Harriet Agbini.